Hey everybody, Pat Petrini here. And I thought I would take a few minutes to record a short video on just the Arizona market, kind of give you an update of what's going on down here, what's happened over the last couple years, where things are going, and just try to give you a quick glimpse into why we think that this is literally the best market in the country to be investing in, and why right now is such a great time to be getting into this market. So I'm just going to move through, a couple of things, give you some data, and maybe kind of spark your curiosity here. Now, of course, everybody is pretty familiar with the boom and the bust that the whole country has gone through over the last number of years. And the big real estate bubble that kind of started in '04 and started coming down in '07 and '08, most of the country experienced that bubble. But most of the country experienced it to varying levels, and a lot of people don't fully grasp how hard some parts of the country were hit, specifically Phoenix being one of those. A lot of places in the country, went up. They saw significant appreciation, but a lot of people, when we talk to investors in different markets around the country, they talk about how their market went down 20 and 30%, or even the really hard hit places 40%. Everybody kind of feels like they got hit really hard in the crash, which a lot of people did. But a lot of people don't realize that here in Phoenix, we literally dropped about 60 to 70% in value across the board. You could hardly point your finger at a single home in Phoenix that didn't go down in value 60 to 70% when everything crashed. So everybody crashed, but it crashed really, really hard here in Phoenix. We're one of the top 3 crash zones in the entire country. The only other ones, Vegas was one. A couple parts in Florida went down pretty hard, and then a couple parts in Southern California. So you could say we were one of the top 4 crash markets in the country, but we may have been the worst out of those 4. So anyway, I've got this little graph here, and I'll put it up when I edit this video. I'll put it up, right up in front of you so you can see it better. But I'll just talk through it here. It kind of goes back to 2001, this chart, and it sort of shows the median pricing. Now, this is just for Phoenix. This isn't for nationwide, but it shows the median home prices and what has happened to those. Or actually, no, this is average price per square foot. Which is similar type of chart, but anyway, it shows the average price per square foot here in the Phoenix area, and you can see that things went up in this huge bubble, and then of course everything burst here towards starting at right about 2007 and all the way into late 2008. Well, the important part here is if you look at this dotted line that is sort of moving up at a gradual incline there. That dotted line is sort of, it shows on here, it shows a compounded growth rate of 2.5%. So if you look at the beginning part of the chart, you can see that things in 2001, 2002, 2003, things were kind of moving along that dotted line. That's meant to sort of represent what is typical average growth in real estate prices. Typical average growth would be 2.5% is probably conservative. It's probably closer to 3.5% or 4% would be more typical average growth here in Phoenix. But this is meant to be very, very conservative to show where we are and where we're going. So that's sort of like, that line sort of represents where things probably should be if everything went along as normal and there wasn't this big boom and these artificially low interest rates and all these different things that cause the boom, and then this bust. If everything just kind of went along as normal, that's probably where things should be based on historical averages of the rates that housing prices tend to go up. So you can see that when everything crashed, when the bubble popped, it really overcorrected. Values dropped way below that dotted line. And they kind of hovered there for a while, went up a little bit, came down a little bit, and then now we've started to move, relatively aggressively back towards that dotted line. And that's been because of a number of things, but essentially that's the housing market, moving back up to where it probably should be based on historical averages. One of the reasons why that has been moving up so aggressively is because investors from all over the country and all over the world have been seeing the numbers, and I'll talk a little bit more about that in a second, but the numbers, the return on investment that Phoenix specifically offers to them. And so investors have been, running in and scooping up these homes, which has been starting to drive the price back up. So as you can see, though, we're probably about halfway up towards that dotted line. Now, again, that dotted line is conservative. You could make a good argument that should be even higher than what is shown on this graph, but we'd rather be extra conservative. So the gap basically between where we are and where that dotted line is, where we probably should be, is what we refer to as an opportunity gap. That's part of the opportunity that exists in buying at today's prices, is getting to benefit from, as the market moves up to more of where it should be based on historical averages, getting to benefit from the appreciation, the rise in values of that. And take advantage of that opportunity gap. So that opportunity gap exists in different markets, today around the country, but I've not seen any other market where it's this significant, where there's so much room for growth still left. And so that's one of the things that the Phoenix market offers. Now, I'll talk really quickly, just grabbing my other pieces of paper here. I'll talk really quickly about why investors, I'm not going to go into too much detail here, but why investors are so quickly scooping up the Phoenix market, why there's so much money moving into the Phoenix market versus other markets. Well, and it's interesting because it's not flippers. Most of the money that's coming into this market is not people that are coming in to fix properties and flip them. It's people that are coming in to buy and hold long term. It's even big hedge funds that are coming in here to buy hundreds and even thousands of properties and to just hold on to them long term. The reason being is because the prices of homes have gone down so much here, but the rental market is incredibly strong, and it historically has always been very strong, and there's lots of good reasons to believe it's just going to get stronger. I'm probably going to do another video on that specific issue. But basically, if you're buying for cash flow, which that's really our primary strategy here, that's what most of our investors are buying for, is the monthly cash flow that these properties bring in. If you're buying for cash flow, then a good, just a starting ratio to look at is the purchase price of the house versus the amount of rent that it brings in. And that ratio happens to be incredibly good here. In a lot of markets around the country, you'll pay twice as much for the same house, and it'll rent for the same amount. So you can figure if you're paying twice as much for the house, your mortgage is twice as expensive, but the rent is the same, your cash flow is going to be quite a bit less. So the numbers work out incredibly well here because the houses are so cheap, they're so undervalued, but the rental market is so strong. We're the 5th largest city in the country, and there's a lot of reason to believe that the rental market will only continue to get stronger here, or at least stay stable, that it means that we're buying at incredible prices. There's lots of room for appreciation over the future, but especially there's this huge cash flow that we're bringing in every single month, because after we pay the mortgage, if there is one, and after we pay the other expenses, there's still lots of money left over from the rent, and that's the cash flow that goes to our investors. So anyway, I've got just a quick article here, and again, I'm just going to read a couple things. I'll put this up in front of you so you can see the article and actually read it. But this just came out a couple weeks ago in a local newspaper, and it says investing in Metro Phoenix houses and other markets hit hardest by the housing crash is becoming the next big Wall Street play. It's interesting, there's a lot of, like I mentioned, there's a lot of hedge funds and these big Wall Street companies that are starting to come in and buy up huge amounts of houses to try to benefit from the historically low prices that exist right now. These purchases aren't, just like what I was saying, these purchases aren't in the buy and flip market. They're amassing large portfolios of houses to renovate and rent for the long term. That's exactly what we're doing. We do flip some properties because while we're finding these good ones to buy and hold, we end up finding some good flips also. But generally, our main strategy is to buy and hold for the long term, because that's where the real fortunes are in this market today. And then let's see. Oh, yeah, it just has a couple of quotes here. So anyway, last thing that I'll show you is this was from Realtor magazine a little while ago, and it showed the top 10 turnaround housing markets.
and it lists Phoenix, Arizona as the top turning around, the #1 recovery market in the country. Shows based on how they calculated it, shows the median increase year over year as 26%, which is incredibly, is really, really aggressive appreciation. And that's just because, again, we overcorrected so much in the downturn that now things are kind of taking a little bit of a steep upward turn to get back to probably where prices should be. So there you go. Just a couple of little tidbits on what's going on down here in the housing market. I've got probably a few more videos coming out that I'm going to talk a little about our economy as a whole, the different directions that our economy could go in the near future, and why we think that this type of investment program is such a good move is such a safe and secure play for the future. So anyway, thanks for taking a few minutes, and I'll see you on the next video.